Yeah, everything should work. Joe, can you check?
Oi.
Uh, okay. Yeah, so it works. Okay, let's give it a minute till everyone joins in. I'm just going to message Telegram and Discord so people know we are live. And in 2 minutes, we're ready to dive in.
Sweet, man.
Okay, perfect. Okay. So I'll just remind the giveaway till everyone hops in before you start the analysis, and then we can dive in. So hey guys, hope you're all feeling blessed, good. I'll just quickly remind what's the giveaway about, if there's some new traders in the live stream. So basically on EA Jake Instagram, I post on a weekly basis quizzes and polls. Traders who want to participate, just complete a form, choose the option that you think is the correct answer, and then from the traders who answered correctly, I'm going to draw on these live streams. Depends on how many accounts we are going to provide, which is usually posted in the story. Then I'm going to draw a few traders and display them on a live stream session. Once you see your name on a live stream session display, then just message me on EAJake and I'll provide you with the evaluation. Today we have 9 5K accounts and 1 10K account. So as can analyze the markets live, then I'll be just displaying the names. So best of luck. This is completely random, just so you know. We usually just get the names, put them into wheel of names, which is random name generator, and then display them. So just how it works. Okay, so whenever you're ready, Ken, you can just dive in, and I'll see an opportunity to jump in. I'll just jump in if I have analysis as well.
Cool. All right. Let me share my screen one moment.
Yeah, sure. Take your time.
Okay. Let's minimize this. Close. Okay. All right, guys. Welcome back. Welcome back to another session. Myself and Jake. I'm excited because we're going to be doing these more frequently as well. So you guys are going to be catching us every Wednesday, obviously, and on a Monday. So every Monday and Wednesday. So plenty of value.
The next week.
Yeah, from next week. From next week. And the good thing is like right now, there are so many talking points. You know, as you've seen from the previous streams, those that have been joining us, there's been a lot for us to be talking about. I could sit on here all day, potentially, and cover everything in a lot more detail, but obviously we can't do that. We've got so let's jump into today. Okay, I have quite a few talking points, same sort of structure. We'll go over some of the key events that are happening in the markets, key economic data, how we should be positioned around those, and just seeing how things are reflecting on the charts right now. You know, again, giving things from my perspective, what I'm seeing. Have a trade running, which we'll discuss, some ideas that I'm looking at as well. So I want to start off with this. So you may or may have not have seen this in the news. If you see on my screen here, I'll just bring this up so it's bigger. So basically, Trump on Friday night, he announced that the US is to double down on steel and aluminium, or aluminum, as Americans say, imports to 50%. Okay, Trump's saying. So this is, again, kicking off the trade war. This hurts a number of economies. This hurts China. This hurts Canada, Mexico. And without needing to go into all the nitty-gritty of the details, the key is that it's created more uncertainty, okay? And as we've been noting in these streams, is that we're going to be talking about tariffs the whole of 2025. So make sure you get used to it and at least just have a level of understanding or awareness of what's going on, some of the headlines or the major headlines that are going. I'm not asking you to keep an eye on every single headline, like, oh, these guys spoke today or blah, blah. Just keep an eye on the major headlines. If we get a breakthrough, if some deals are negotiated, that sort of stuff. So anyway, what this has done in terms of this story, as I said to you guys before, it's created more uncertainty. You know how we've been talking about the dollar being uninvestable? You know, we're in this sort of state of sell dollar because Trump's making it uninvestable. He's creating an uncertain environment. And remember, as an investor, you want to put your money in somewhere safe. And given the volatility around the US economy right now, it's not being deemed as safe. Okay, the dollar's lost that safe haven status. Now, we need to also keep an eye on, you remember when Trump came out with his whiteboard and announced all those tariffs? It was Liberation Day. So he's got the date of July 8th of all those broader import duties coming into play. So a number of other economies are going to get hit hard on that if negotiations are not successful. So that could also further add some pressure to dollar. And maybe this is what, if there's lack of progress there, maybe this is what kills stocks, okay? Because it killed stocks before when he came out and announced all these tariffs. Sentiment was largely harmed, but stocks have been on a rise in hope, which we're going to get onto in a moment. I'm going to talk about stocks because I've got some longs running at the moment with NASDAQ. So let's just look at the dollar a moment quickly because there's some key things I want to talk about for the dollar. Right now, you know, obviously we had the closure of May last week. And remember in our previous streams, we were talking about, my eyes were just on taking out these lows of April for us to even consider some sort of rebound, okay, or recovery for the dollar. I need to see personally these lows being taken out, a nice wick fill. June was a bit of, May was a bit of a funny one because we rallied. I said this is likely to be unsustainable. And then obviously we closed in the red just about. And then so far for the month of June, from get-go, we've seen selling. And it's largely because of this. Trump doubling down on those tariffs is creating a trade war again. So right now, obviously, nothing's changed, right, in terms of structure for the dollar. You can keep, I know I sound like a broken record, but we continue to see those lower highs, lower lows. Okay, structure is intact. And structure is intact thanks to macro. And if we were to get a breakout, a breakthrough, excuse me, in terms of these tariffs, and we're not talking about tariffs anymore for 2025, then structure would change. Okay, and flows would come back into the dollar. But right now, from my perspective, trading what I see and what I'm hearing in terms of the news, we continue to sell dollar rallies. Okay, so we're in this period of consolidation at the moment, guys. Okay, if you see here, there's a little bit of congestion ahead of those lows. When I'm saying these lows, I'm talking about the lows of April. We've got this bit of congestion here. Can you see some demand ahead of that 98 area, which is sort of not giving up without a little bit of a fight. So once we grind this down, then we're going to challenge those lows and we have room to go and print a new lower low. Okay, as part of this structure. Now, before I get on some ideas with Euro, I just want to continue on the US front. Again, sticking to the economic calendar. By the way, we have a video going to be coming out soon on the EH channel regarding trading high impact data. How, as a funded trader, even if you're not a funded trader, how you should be approaching this high impact data. Okay, so there will be a video coming across, so stay tuned on our YouTube channel. Make sure you are subscribed and you have notifications on for that, because that is going to be valuable. Now, let's start off with Monday. Okay, do you remember again, guys, how I'm talking about this US being uninvestable, data slowing, we've got all this uncertainty of tariffs. Now look at this, ISM manufacturing PMI, bad, 48.5. Markets were looking at 49.3. Previous was 48.7. This is bad because, look, I've spoken to you guys about this before. You see this dotted line here, that's 50. Anything above 50 means the sector is expanding. So manufacturing will be expanding. Anything below is contraction. And look, we've been below for quite a while now. So this is contracting. It's falling again after this brief blip to the upside, the back end of last year. And now we're back to the downside. Okay, so manufacturing is contracting there via the ISM PMI number, which is bad. Okay, showing that the US economy, again, slowing down. Let's fast forward to yesterday. We had JOLTS job openings. So this is the amount of job openings that are being reported, right, in the latest month, for the month of May. This come out at 7.39 million. Now, this is something that I have to save for another video, because basically markets, there's always the bigger picture to just a single headline. So you see markets look at this and like, yeah, this is great. You know, we've got a high amount of job openings. But you have to understand, you know, when there's data, there's a report behind that data that gives us some more meat, you know, meat to the bone, right? So retail, look at this, like, as I just said, yeah, it's a strong number. But when you look at the actual report, and I pulled the point here, I'm just going to sorry, where is it? Here. Okay. Now in this report, it actually showed that layoffs, so people being laid off from their job, okay? People being laid off from the workforce, i.e. they're going to be becoming unemployed. The layoffs jumped. 196,000 layoffs, taking it up to 1.786 million. Okay, so we're seeing a rising in layoffs. So ignore that openings for a moment. That doesn't matter, because look at the rate of layoffs. So this feeds into what I'm saying about we're getting that slowdown. Sell dollar rallies. Okay, now let's look at today. You guys just saw it. ADP, privately conducted payrolls. So for anyone that doesn't know, this figure is conducted by Automatic Data Processing. They are they're a private company. This is not the government's number, okay? You know, the government have NFP, which we're going to talk about in a moment. This is a privately conducted payrolls number. But anyway, markets are very sensitive right now. So they're reacting to this. 37K. Look at that. Sharp decline, right? I'll just put the chart up here just to show the data there as well. Sorry, up here. Oh, no, maybe I didn't put it in ADP. No, I didn't. I think I took a screenshot of it, though. No, I didn't. So, oh, yeah, here we go. Look, ADP. Look at that sharp decline. Can you see we're in a downward trajectory? This is the privately conducted payrolls number, but we're seeing the same thing anyway, more or less, with the actual NFP, this downward trajectory. So what this signals is labor market slowing down. If the labor market's slowing down, then that's going to mean less output for the US economy. That means the US economy is going to be shrinking. That means the US economy could be contracting, right? Dollar negative. You see, I'm just painting a big picture a moment for everything. Okay, so that's bad number there for ADP. So that's why I continue to see you see these pullbacks, these rallies for the dollar, they are vulnerable to continue being sold. Okay, now, look, let's just quickly touch upon Friday before we get into sort of a breakdown of some ideas. Friday, obviously, we've got non-farm payrolls. The numbers expected to call, as you can see here, only 132K jobs being added. It has been on a downward trajectory. You know, when you look really, the previous numbers have been consistently revised lower. The unemployment rate itself has ticked higher. Sorry, that's Canadian. Help if I look at the right one. Okay, unemployment rate's been ticking higher. And the average earnings, wages, has gone down a little bit to 0.2%. So we are seeing cooling in the labor market, and I wouldn't be surprised if that trend continues. Okay, so just with all that, I'm expecting some further downside. Now, if downside for dollar provides opportunity for euro. Before I move on, I just wonder, Jake, obviously what I've just
Yeah.
sort of noted there with dollar, what are your general thoughts at the moment?
Well, I'm not that informed about the trade war, which currently is the biggest mover for dollar, and about the fundamentals. I'm currently more focusing on euro, so I'm waiting for the NFP data, not really in the focus of the Fed's latest policy. So because euro is right now really volatile, mostly because of Trump, right? So I'm trying to avoid trading dollar, but I completely agree with you with your analysis. So I would probably join in as we discuss the euro. Once you have actually the analysis, I don't know, are you going to talk about the ECB?
Yes. Yeah, I'll be
Yeah.
getting
Okay.
on to that.
Perfect. So yeah, I would rather join on the euro as it is the pair that I've analyzed. The dollar is too volatile for me. I'm conservative a little bit more.
Yeah, that's fair. That's fair. It has. I mean, yeah. Since obviously, well, really, since Trump's come into play, even the anticipation of Trump has been very volatile. I know a lot of institutional players that have been, in terms of their speculative books, have been avoiding dollar-related pairs just because of that volatility and somewhat unpredictability,
Yeah.
given obviously all these headlines. So I don't blame you, my man, and it makes sense from a portfolio perspective.
Yeah.
Yeah. So obviously, the flip side to what I've just described there with the dollar. Let's get on to euro, because obviously euro makes up over 50% weighting of the Dixie. Now, I'll just sort of get your attention on the weekly for a moment. We discussed this last week, just how we are still structured to the upside at the moment, with these higher highs, higher lows. I had this staging of rebound in May after this pullback here, big break of structure and this pullback, and then obviously a bit of consolidation there last week, and now just looking to further extend to the upside. As you can see, just without the analysis on the chart, you can see all that supply that's built up around that 114 area, which is why we ran into a little bit of friction there last week, couldn't quite break through. We need another catalyst, basically, and that catalyst could be tomorrow, ECB with their rate decision, which we'll talk about, or it could come with NFP on Friday. Either way, we should get a reaction. And I am still leaning towards, obviously, just given everything that I've said, I will still lean towards that this breaks out and we push to the upside. I mentioned some longs that we had last week, which were quite nice, but now just having to deal with this this consolidation at sort of 114. If you look here, this is a sort of a zone that I've got marked up there. We had a bit of a fake out here yesterday on Tuesday, so push above on Monday and then suck back below yesterday. So what are we observing here in terms of sort of trade idea? Let me just clear this off a minute. For me, I'm trying to look for the price to get comfortable. Like I wanted longs here, but we didn't hold. You see, I'm always looking, as I always say in the streams, I'm looking for a reversal candlestick there, a validation of a closure above, but we didn't see that. We failed to hold and we just sucked back below. But we're still holding structure here. You see the high here, higher low, high here, higher low. And then I'm expecting that to extend to the upside and go and print a new higher high. And maybe that gives us that clearance to go out of this 114 area, all this mess here. So I'm still eyeing up potential upside. For now, I'm going to be sat on the fence till post ECB, just as quite a sensible move for me. But I expect this structure to remain intact. It's almost like we've got a bit of a W forming here, the neckline up there, and looking for a breakout. But structure remains intact, and I'm looking for another high. I was eyeing up potential longs today on this Asian range breakout here. I was waiting for a pullback and retest of this zone here. You see this area here at 113.90, 80, but I didn't get that hold. And then we sucked back below. And now obviously we got that extension to the upside on that stronger, that poor ADP data. So I'm sitting on the hands until tomorrow, guys. But basically I want to see a committed move above this zone, find support. We may not get the support back into this pullback into this zone here. It may come even at this sort of 114.50 area, break retest there, and an extension to the upside. But what I'll wait for is this new high to print, then get in on a lower high, a higher low, and then jump in, okay, into that 115.50, 116 territory. So let me make that very clear, because that was a bit messy. So I'll wait for this higher high to print, okay, just to confirm structure's intact. Wait for a pullback, depending on where that is in terms of where we find support, and print a new higher low, and then I'll run for a higher high. And I think that can look, if you look left, there's quite a room for that to run in towards 150.50, 115.50. all eyes on tomorrow. Okay, ECB rate decision, as you can see here. Now I want to show you something. Let me just bring up my my pricing. So as you can see on this graphic, right, probability is a 94.2% that they are going to cut. So that's largely priced in. You know, people are always newbies that, and I'm sure there's quite a few new guys in here. When it comes to rate decisions and just general data, some people get confused, you know, if they've like done something and why hasn't euro weakened. So in this case, we're expecting a rate cut, right, of 25 basis points. But people get confused as to, oh, they cut rates. Shouldn't that be negative for their currency? Well, not if it's priced in. Now, a lot of markets are based on what players, institutional guys, retail guys, everyone is expecting in terms of the outcome. If we deviate outside of what we've priced in, what we've expected, then we'll see a move. Depending on how much we deviate outside of those expectations, we can get a larger move, right? If we deviate a lot outside of expectations. So say, for example, the ECB tomorrow was to surprise us and they cut by 50 basis points, euro is going to fall hard because it's not expected by the markets. It's not priced in. So that's why tomorrow we are unlikely to see euro weakness on the actual decision where they cut by 25 basis points. As you can see from my graphic here, it's largely priced in. And really what we're going to be interested in is what Lagarde says, okay, at her press conference. If you look here at this graphic as well, for the next decision, July the 24th, there is a probability of 68.8% that they're going to hold next month, okay, because they've been cutting quite consistently, which has been expected. But these guys are expected to hold now for a little while and probably observe market conditions, i.e. the tariffs, the uncertainty there, before they make further decisions to see if that the tariffs come into play, and they obviously the tariffs would affect inflationary levels. So I'm looking for them to signal that they're going to be on pause, right? The Eurozone economy, if we are to have two scales here, Eurozone, US, and we were to measure the weight on the shoulders of the both respective economies, obviously the Eurozone is made up of a number of economies, but I'm talking about as a whole. US has so much weight on its shoulders right now. So it's pushing down, 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 down. And the scale is like this. This is why I see euro heading this way and dollar heading that way. So euro dollar to the upside. You know, remember we had like a couple of weeks ago, we had the PMI data from Europe. The PMI data is still quite stable. Remember, we've had that injection of cash coming into the Eurozone, German stimulus, 550 billion euros. There's all this talk now. I mentioned it in last stream about this talk for the euro to become the potential reserve, the new reserve currency of the world, because people and big players are losing faith in the dollar because of all this uncertainty. And Lagarde mentioned it a week ago or so, that the possibility that euro could have this reserve status. And it's been, I know a lot of articles are writing, newswires are writing about this now, about that possibility. So not to say that's going to happen anytime soon, but the wheels are in motion. You know, just the thought is out there in the world. It's out there in the financial markets. So I think all of this, for me, is quite supportive of euro outperformance versus the dollar. I like euro versus a number of its peers. So I'm looking for longs anyway, as described for euro dollar. What are your thoughts, Jake, at the moment with euro?
Yeah, sorry. Yeah, I was about to jump in. I've got pretty much the same view on euro. You've covered it. There's a 25 basic point cut coming tomorrow, and then probably hold, which is all about expectations. So it is crucial to tomorrow, guys, to watch what's going to happen, not only on the policy rate decision, but also Lagarde's press conference. I'm going to probably just remind that if you want to, guys, you can download Financial Futures. It's a really good app where you can track the events and data releases. Whenever Lagarde speaks, they mostly highlight what's important in a speech, so you can tell whenever ECB is heading for another cut or rate or pause in the rate cuts, which is important. But let me share the screen.
Yeah, please do.
Sure, screen share and trading view here. Okay, perfect. So on Euro USD, I'm mostly on the same page. I'm waiting till we break. This is daily chart. I'm waiting till we break 1.15, because then it's very high probability that we're going to create new high. So once we at least closed above 1.145, I'm going to own for our chart. So once we break and close above this, there is a high probability we're going to create a new high from 1.157. So I'm not going to take the positions now. I'm going to wait for the press conference at least, because you never know. Might actually turn to high expectations for rate cut on the next meeting, and euro might be falling behind. So I would advise you to do the same. But if euro indeed gets bullish momentum as a confirmation of the next pause in the rate cuts, I'll be probably buying. Not only euro USD, I've talked about this for the last 2, 3, maybe live stream sessions. I still really like the euro Australian dollar towards the upside. So once and I was still waiting for the break. I mean, we were talking about it last time, but I was still about to enter the position once we break above 1.77. I think if the euro gets the bullish momentum, we can now probably bounce from the channel. And if we get the momentum tomorrow, I'll be probably entering whenever we close above this zone. The euro and pound, for me, pretty much the same. I'm pretty sure we might be bouncing right here whenever we are creating some sort of a pattern of head and shoulders reversed, or we'll just continue in the upside. From the pound standpoint, the pound is bullish, but at least on the index. But I think we can get some sort of a correction which would help on the euro pound pair. So yeah, euro USD, euro pound, or euro Australian dollar, I'm bullish on all of three in case that the expectations, the chances, and the expectations toward the next pause in the rate cut gets higher. Yeah, that would be probably for me the trigger to go bull on or go long on euro. I mean, might be actually thinking about entering now the euro Australian dollar, as Australian dollar is from those three currencies that I've mentioned the weakest one. So this might be actually a good entry price. I don't think we'll break below 175. So if I'd be trading, that might be probably my zone of stop losses. In case we actually do get bearish momentum, I might be entering again on 173, but it's 4-hour chart. There's still a lot of space in between the current price and 173. Nevertheless, if something like the next rate cut from ECB is announced, or at least hints are in the market, then I'll be probably avoiding euro Australian. Well, I don't think that's happened. So yeah, I'm long on euro as well as you can.
Yeah, man.
Yeah, that's probably. I mean, the inflation was printed too low last time, so maybe we get a little bit higher numbers. Also, the PMIs didn't really went bad. I think we get quite good numbers. So I think the consumer sentiments might get back in the eurozone, and once consumers are spending money, the inflation might tick a little bit higher, which could be a signal for ECB to just give it a pause. And in that regard, we might get the bullish euro.
Yeah. Yeah.
Yeah. Okay. That's probably from me about the euro. I'm going to give you back the screen. Your ones is usually more important one.
All right.
And
share screen again.
I'll try to prepare the US dollar, as you've mentioned. There's a lot of going on.
Yeah.
So might actually give some notes, but it's still too risky for me, to be honest.
Yeah, no, fair. No, I don't blame you. That's fair.
Yeah. Also, are we going to take a look at gold? I see a few.
Yeah, it's quite a few
comments on the gold.
messages with gold.
Yeah.
I've got some other things to talk about. Let me get. All right. Let's
Yeah,
go.
sure. No. You can continue. We can get the gold at the very end, as we did last time.
Yeah,
So
just hold tight, guys. See, it's been mentioned. We'll get to gold. Obviously, there's a few things to talk about gold. Let me just. Okay, my screen's being shared. Can you see, Jake? Yeah.
Let me check. Yes, I can see it clearly.
I just wanted to while it's sort of in my head, so we don't come back to it later. Just with obviously Jake. So you just mentioned the potential longs there for Euro Aussie. Now I'll just quickly touch upon a couple of Aussie things to note. So this morning, early hours, we had GDP from Australia, came in at 0.2%, which is bad. Okay, bad number there. Big sharp fall from the previous 0.6. Expected was 0.4. So this is only just tiny bit of growth for the quarter, which is not the best. We're heading towards obviously no growth and potentially contraction. We obviously saw the other week, the RBA last week cutting rates. Okay, the guys have cut rates. There was talk for them to cut more. You know, they discussed the potential to cut by cutting by 50 basis points, but they didn't. So we've definitely got a slowdown in Australia. There's also something else I wanted to note, which is, where is it? Let me just get it up here. Yeah, Australian current count as well. We've got a big negative here, minus 14.7 billion. Forecast was minus 12.4 billion, and previous revised low to minus 16.3 billion. We've definitely got a slowdown in Australia. When you look here at expectations, I've got it here. So markets are expecting, look at this, expecting cuts July, August, September, and November. In terms of general expectations, we're leaning towards consistent cuts coming forward. Not to say that they're going to cut every month, but markets are pricing that in. All right. And it's not 100% priced in yet. So for me, there's still volatility to suggest that, you know, AUD could weaken further. Okay. AUD has more weakness potentially to come there. So I like the idea of Euro Aussie longs as well. I did have some longs before, which I got taken out of. I got done by the thinking that we'd broken out here. It was last week's stream. It's anyway, it's somewhere in here on this break retest, and then, you know, we ended up sucking back below. So I still like the idea of longs. We are, if I just remove this zone a minute, we are in this, let me just go to the weekly, sorry, quickly, guys. So we are in this push to the upside after this reversal candlestick here mid-May. Now we're trending to the north. We've had a couple of big bullish candlesticks there. Would like to see that being followed through. Obviously, you can see the structure at the moment with the higher highs and higher lows. Would like that to remain intact. Be looking for signs of potential reversal so long as this holds. Okay. Obviously, there's a risk that this doesn't hold, but the fundamentals support a continued push to the upside and remaining intact. So I'm keeping an eye on this. If we get signs of reversal, then I'll look to take a trade once we close above, back, you know, like this, close above, and then take some longs into a new higher high. So I'm watching this at the moment, because this could just prove to be a bit of a fake out and we suck back below in this channel and then go and push to a higher high. So I'm watching that. And then I'll be looking for the idea of a swing, as Jake and I have been talking about before, you know, where Euro Aussie has the potential to run in towards sort of 179.50, 180. Okay. I'm going to go over to NASDAQ right now, just because, let's just go to NASDAQ, because stocks are pumping. I'm in some longs right now with NASDAQ. I did mention in my last rundown, because someone asked about NASDAQ, you know, why are we still pushing to the upside despite all this, you know, tariff volatility? All right. Well, why are stocks in general still pushing that? And I just said, look, at the end of the day, stocks are a bubble, to be honest with you. They're a bubble. I know a number of institutions have been talking about this, because at the moment, they're kind of disregarding fundamentals. You know, if all this volatility with the tariffs, they're disregarding that and they're just pumping. You know, when we look at NASDAQ specifically, we had good earnings for NVIDIA. So we're still getting some encouraging signs there of performance for some of the heavyweights. You know, NVIDIA reported good earnings. Dell, the demand is still there. There's still all this AI optimism right now. AI is still booming. Tech stocks are still sexy. And just we're just buying the dips, and we're just disregarding fundamentals for now. That's it. And I think where we haven't had the actual worst yet, in the sense of, you know, we've had these tariffs announced, but there's still room for potential hope, you know, that good deals are negotiated for everybody. So market is driven by a lot of hope, a little bit of delusion, in my opinion, delusion from the current situation. Yeah, we're continuing to push the upside. So I did take some longs on Monday. So I'll talk you through it. So remember, we'll keep an eye on this big zone here. So it's a bit messy here, but this big zone at around this mid 21 region. Okay. On the 4 hour, you can see how we're sort of structured to the upside now. After this little bit of pullback, starting structured to the upside, higher highs, higher lows. It was down here that I'd entered within this big zone. See, we had this pullback in this new area of supply, broke above, retested, and then I got in here on these longs here on Monday night, and I'm running this to the upside for this sort of all-time high area up here. There was also another day trade that I took. You see, look, we're pulling back, buying the dips, pulling back, buying the dips. You see the structure right now is very clean. Just dip buying is being seen. again, something that I've traded for a little while that I know is quite popular at the moment. I keep seeing it on social media. Everyone talking about, range breakout at the open. So I'll talk you through it. Yesterday, we had how this sort of works is you mark up the opening range. People do it. Some people do it on a 5-minute candlestick. Some people do it on 15-minute. I do it 15-minute, where you mark up the opening range for. It works on not all the time as with any strategy, but US indices. And UJ works quite well on as well, because UJ is quite correlated to risk appetite and stocks. So you mark up the opening range, the wick high, the wick low, and that's the range basically. And you wait for a break, retest, firm break, bullish break, retest, and then look for a run to the upside. Typically for me, I'm looking for about 2R on this, but I just trail my stops until I see signs of reversal. I typically just let this run. So yesterday this is on the 5-minute. Break, retest, held, got in on this candle, and then ran those longs, and ended up getting out up here. Saw a little morning star, evening star there, closed below, and obviously we had a pullback. But ultimately, these longs still remain intact. The swing that I've got running right now. So let's just see, because we've just had the open now, stocks. Now we've got the breakout already being observed on the 15-minute for NAS. So we'll mark that up. So what I'll be looking out for here on the 5-minute, we're getting the breakout now, which will obviously we've still got another 9 minutes until we get this closure. But what I'll be looking out for, as I just said there on the 5-minute, would then be coming back, retesting the high of that opening range and looking to run some longs to the upside. Now, typically speaking, it depends. You can place stops, leaving a bit breathing room below here. You can place. Sorry, guys, give me one moment.
Yeah.
Sorry, guys. So you can place stops just below this the range high, or just below the range the low. I usually place stops just below the range high and just leave a bit of breathing room there for those longs. So I'm just watching that at the moment. We mark up US 30, same sort of thing there on 15-minute. Oh shit. Sorry, guys, one moment. I'm confused. sorry. The time, what's the time today? Oh, it's 2:30. Okay, sorry. We still got this being formed now. I apologize. I've just got a bit lost there on the time. So I'm waiting for this opening range now. It'd be on the 2:30 London time candlesticks. That's 9:30 Eastern time. So we haven't quite formed that yet. So we're just waiting for that to form at the moment. So that's what I'll be looking out for, some potential continuation for longs for NASDAQ. So we'll give that, 6-7 minutes until that closes. And then we'll mark up that high and that low of that opening range. Okay,
that's an interesting strategy. Do you currently hold the longs on Nasdaq, or do you close it like in the short intervals? I mean, are you trading 15 5 minutes time zones?
Yeah. So with this, obviously I've got this swing that's running from Monday down here. Mm-hmm. If everything remains intact, I will have obviously a swing position, but I'll take the day trades in between, like that one from yesterday, for example, that I will take and just get out. And then I will have a swing, obviously a smaller swing that's running, for my larger targets. But in between, so long as the structure remains intact there, then I'll be taking those sort of day trades if that presents itself.
Okay, that's very interesting.
Yeah. So it's quite a good strategy. It's proven to be quite successful, has a decent hit rate. If it's there, it's there. The trade's, more or less obvious in the sense of what we're looking for in that break and retest. But there are times where market conditions obviously are choppy and you get, false signals. You get a false breakout, we'll break out, hold, we'll push above, and then we'll suck back below straight away. So, but right now, given the way markets are moving, quite clean, we have clear intentions here of buying these dips. So it's been easier to trade in that sense. Yeah.
Mm-hmm.
What are your thoughts on NAS or just in US indices in general, Jake? Do you think they're a bit delusional at the moment?
Yeah, kinda. Myself, I'm not that big of an indexes trader. Mostly trading Forex and exotic pairs. So indexes are, to me, I haven't found yet strategy. I'm actually watching you doing this strategy, kind of trying to figure out how it works. So I would implement it next time because yet I didn't found. I don't know if you also do like a fundamental analysis on indexes, or is it just purely technical?
Yeah, so I do in terms of like as an indice as a whole, I do the
Yeah.
analysis on. Obviously, there's more to it where, in the sense of, at the end of the day, this indice is driven by some heavyweights, for example, NASDAQ and other tech stocks, Apple. I don't individually do the analysis as such on the stocks, which is something that I would suggest that people are aware. But usually I just do it on the indice as a whole. But
Okay.
I've had some confluences with this because obviously the tech earnings last week with Nvidia was quite encouraging, and Nvidia really, depending on how they perform in terms of their earnings, really shapes up sentiment for Nasdaq and I think just stocks in general. So that was enough for me just for see a continuation to the upside, just because everyone was waiting for that, and their outlook was not bad as well. So yeah, man.
I mean, when it comes to indexes or bonds, I usually used to trade bonds a lot, and indexes, but I used to hold them just for weeks, months into the option on longs. I haven't traded them on day trading, which I find fascinating.
Yeah.
But usually I approach these two markets, whenever it's bond market or indexes market, like an investor. So I buy and I hold.
Nice.
Yeah.
Fair. Awesome, man. Cool. Yeah, so let's see. I mean, I recommend go and have a little look, go do some back testing on it, check it out, see how that works. So it's just I used the 15-minute on that anyway. So 15-minute opening range. So worth checking, and be interesting to hear your thoughts on that one, man, at some point.
Yeah. I'll
We'll
give it a go.
We'll jump over to gold, and I'll come back to this in about 5 minutes or so. Obviously got everyone to talk about gold right now. We've been speaking about gold the past few streams. I mean, gold's been supported to the upside, as everyone knows the geopolitical tensions. Russia and Ukraine is still very up and down at the moment. Middle East tensions very high. There's a lot of physical buying of gold. Central banks are buying gold. China are really buying up gold. Holdings are jumping up just from sort of central banks and sovereign purchases. What else? Weaker dollar, people hedging against the tariff uncertainty, people are hedging about the economic downturn that's to come. There's a lot of smart money buying gold, institutional buying gold, big players buying gold. So we expect this to continue to push the upside. Now, obviously, if I was looking for the price to come back down here to buy, this is where I was looking at from my previous stream. I wanted to see the price come down here at this sort of this trend line has been in place since early 2025, where we've been dip buying there. But obviously we had that push on that this tariff news. This is why gold opened very strongly to the start of the week on Monday, as you see that big push to the north. And now we're just sort of profit taking, because dollar's still weak, right? We're down 0.2 today. Dollar's still weak, but this is just clearly profit taking. This isn't dollar's entering a bearish trend now. No, this is just a pullback because it's profit taking. And if you ask me where my next logical area is, I'll be eyeing two regions. I'll be looking at price finding support potentially in this zone here, 33.20. If this fails to hold, then I'll be looking at coming down to sort of 32.60 area. But right now, if we just sort of focus, let's just go to the 4-hour moment. If you look at this latest, let's just try and gather this latest push now, you can see we're structured to the upside, higher highs, higher low, higher high, potentially higher low here. But now we've got this consolidation. I think it's going to drop. Okay, it looks like we're going to drop here. So yeah, two key areas. I'm looking to buy down here or here, right? But this is just allow that profit taking to come into play, this technical correction to come into play for now, and we'll buy those dips. What about you? What are your thoughts?
I'm the same. There's the level of 32.75. That's probably the level where I would buy. And also I speak about gold on the latest account review on the Market YouTube channel. Basically, I spoke about two options how to trade this pass evaluation, and there are a couple of traders who passed by one trade on a gold. Most of those trades were longs. And what I would like to just mention is that the market is all about probabilities, and right now the probabilities and risk, of course. And right now the probabilities of gold pushing upsides are way higher than going down. As well about risk, I mean, on gold there's high risks that, if you trade in gold, you get into more risk when you take in shorts rather than longs, because if something happens, as Ken mentioned, the gold can get really bullish. And if you just zoom out on the chart of the gold, you see that it's in a really bullish long trend, uptrend in last 3 years, I think. So whenever you are thinking about buying gold, I would rather wait for a correction and then enter the long than taking short. Of course, if you're a scalper, this won't influence you, but if you're a day trader, swing trader, position trader, long trader, anything above, I think the longs on gold should play well. Yeah.
Definitely,
And
definitely.
yeah, the only position that I've got marked is basically the 3.275. I don't think that market or the gold market will go that low. Also, 3.325 is another level that I'm watching. If market gets as close as that, I might be entering some longs. Yeah, that's probably two levels that I'll be watching on gold. But yeah, Trump is back with the tariffs, so gold should be pushing upside even more.
Definitely, definitely, man. Yeah, agreed. I mean, it's
Yeah.
when you look at gold. Sorry, just checking it. Yeah, when you look at gold from, I mean, just this is it's one-way traffic. You know, it's just one-way traffic.
Yeah.
Like it's crazy just how much this is just pushing to the upside. And yeah, I don't think we're expecting anything to change anytime soon. And you know, I'm not surprised just with some of the top performers there just buying gold within the community at EA. It just makes sense, you know,
Yeah.
unless something drastic happens, which I don't know. I can't imagine gold sort of falling off a cliff.
Me neither. Me neither.
Present. So
And the last three traders that basically it was the same. Bought gold, hold it for like 2-3 hours. When there was a momentum, they let it run and passed the evaluation. Got funded at the very same day in less than 24 hours.
wow.
If the momentum wasn't there, they just leave the trade, close the position, and we're looking for new trade. But basically, all three of them were just waiting for gold to get a little bit of bullish momentum, entered, and they just passed evaluation. Yeah, one of them got paid last week $32,000 on gold
Nice.
trading. So in 5
Beautiful.
trading days, so gold is actually really decent for traders at the 8.
Love to hear that. What I
Yeah.
want to hear. Nice. Good stuff. Yep. So that's gold. Yeah, I mean, I've got the levels marked up on NAS. So the high up here at around 21,750, the low down here at 21,680. So as I explained, you know, with yesterday, just looking for that break retest on the 5 minute, and then look to run those longs.
Yeah.
As I said in the swing, I think we're going to come up to this all-time higher up here into 22k. I think that's very possible right now, just with all this this dip buying. But note there is a lot of resistance in between, as you can see here, where we've been wicking in the past. So we'll just sort of keep that. I'll keep that in mind. But otherwise, just looking for that to continue to push to the upside. So yeah, man. I think for now, that's sort of everything that I am involved in and wanted to talk about. Obviously, I will just quickly. Sorry, Jake.
Yeah,
I'll
sure.
also
Go
quickly
ahead.
mention it. Otherwise, it'll be very silly of me not to mention that. Obviously, we've got Bank of Canada here. Obviously, just had the rate session.
Oh yeah, today. Yeah.
Yeah. So they kept rates unchanged at 2.75%. If we just take a look at reaction for CAD, pretty much muted. The reason for the mutedness there, we've got the press conference. That's where the volatility's at. Okay, I'll just check and see if I put the expectations here, pricing. Bank Canada. Okay, so yeah, this today was 71% chance that they were going to hold. And we're just going to be interested in these future rate cut pricing. Is this going to be the case that they're going to hold for now? Because they're dealing with high inflation. We had surprise to the upside with CAD GDP at last reading. I think I remember correctly. It came out surprisingly higher. Okay, yeah, it's higher than the previous 0.1%. Inflation's still sticky in Canada, guys. If you look here, just so you can see CAD CPI. Bring up those readings, just get them up. We had them, a couple of weeks ago. So yeah, all CPI is sticky right now. So it's not surprising that these guys left their rates unchanged, which is why dollar CAD hasn't really reacted on that right now. So we're just sort of choppy, waiting to see what these guys say. I'm not a massive fan of dollar CAD just because of the I'm quite bearish dollar at the moment, and I'm a little bit bearish CAD. But if we were to sort of use those measuring scales again, I'd say right at this moment in time, you'd lean a little bit towards CAD, just because of how strong this dollar uncertainty is. I think this is going to grind to the downside, and we'll work our way. We need to clear. There's some support here where you can see protecting 137 on the nose, nice and psychological. You can see naturally where we're going to fall down to, and that could come today on the back of this statement. If they do say, look, guys, don't expect any rate cuts for us for now. We need to bring down, our focus is on bringing down inflation. If they say like inflation's too high, we need to bring inflation down. This is strong communication that these guys want to hold for a while. Okay. They want to hold at least the next decision as well. You know, structure here is a bit messy, dollar CAD, but structure is still to the downside. So I'd lean towards this heading into 136 today, towards that. Not to say it will hit 136, but I think we're going to grind down there once we take out 137, once and if we take this demand area here. So let's keep an eye on that press conference up in the next sort of 40 minutes.
Yeah. I'm on it with you. Canadian dollar might be a little bit better, as you said, than US dollar. Also, I think the first expectancy was about very start of the last month when Canadian dollar pushed a little bit with the US dollar. And if we get expectations again for a little bit more hawkish tone from Bank of Canada, we might continue in this short-term downtrend. Yeah, on USD CAD. Agree with you. Okay, is that all that you would like to discuss, or do you have something else? Just so I know, I don't interrupt you.
No, that's it. That's it from my side. I want to talk about. Thank you.
Perfect. So, guys, just so you know, this is the last week that we do only one live stream session a week. We are going to start next week doing one on Monday as well. Again, New York session, or 1 hour after New York session starts. And also, as was suggested in the chat, we are going to do one more giveaway apart from the Instagram one on the live stream sessions. So we also reward the community that is active, you guys who are very active in the chat. So we'll try to think of something, and I'll probably announce it on Instagram. But at the latest Sunday evening, I'll just post a story on Instagram what's going to be the giveaway about. And you guys who join online stream session will get the chance. So you all have a chance to win. Okay, so that would be probably all from me. Thank you, Ken, very much for being co-host on live stream session. Awesome. I think a lot of traders learn a lot from you. And I'll see you on Monday.
Yeah, see you on Monday, man. Thank you, everyone, as well, for tuning in.
Okay, have a good one, guys. See you soon.